The market simply reflects who you are. So the question is not, what will the market do next? The question is, who do I need to become to succeed in this business? Answer that question honestly. Do the work that the answer requires, and everything will change. The market is waiting, not to take your money, not to prove you wrong, but to show you exactly who you are and who you can become. Are you ready to see?
Picture this. You're sitting in front of your computer. The screen is still glowing. Your trading platform is open. Another red number stares back at you. You close the position. You tell yourself it was just bad luck. The market moved against you. You were stopped out too early. If you had just held on a little longer, it would have turned around. You promise yourself tomorrow will be different. But deep down, you know tomorrow won't be different, because tomorrow never is. Let me tell you why this keeps happening. And more importantly, let me show you what needs to change. I've watched intelligent, educated, motivated people destroy their accounts. Not because they're stupid, not because they lack information, but because they don't understand what trading really is. There's a statistic in this business that nobody wants to talk about. We call it the 90-90-90 rule. 90% of traders lose 90% of their capital in the first 90 days. Think about that for a moment. 9 out of 10 people who start trading will lose almost everything they put in within 3 months. That's not a small failure rate. That's catastrophic. Now, you might think this happens because people are uneducated, that they don't know how to read a chart, or they don't understand fundamental analysis, but that's not the reason. I've worked with doctors, lawyers, engineers, and business owners. These are highly intelligent people, people who succeeded in every other area of their lives, people who can analyze complex problems and make difficult decisions. And yet, when they come to trading, they fail just like everyone else. Why? Because trading is not about intelligence. It's not about how many books you've read or how many indicators you know. Trading is about managing your psychological relationship with uncertainty. Let me say that again. Trading is about managing your psychological relationship with uncertainty. Most people come to the markets looking for certainty. They want to know what's going to happen next. They want to predict the future. They want to be right. But the market doesn't work that way. The market is a probability game. And until you accept that, until you really internalize that truth, you will continue to lose. The 90-90-90 rule exists because most traders operate from a flawed set of beliefs. They believe that if they just find the right system, the right indicator, the right strategy, they'll be able to predict what the market will do. They believe that losing is something that happens because they made a mistake. They believe that the goal of trading is to be right. These beliefs feel true, they feel logical, but they're completely incompatible with consistent success in the markets.
Here's something that confuses a lot of people. We live in an age where information is everywhere. You can watch hundreds of hours of free content on YouTube. You can read dozens of trading books. You can take courses, join communities, follow professional traders on social media. Access to information has never been easier. And yet, the failure rate hasn't changed. If anything, it's gotten worse. Because now people think that consuming more information is the solution. They jump from strategy to strategy, from indicator to indicator, from guru to guru, always looking for that one piece of knowledge that will make everything click. But here's what I learned after years of struggling myself and then working with other traders. Information does not create transformation. You can know everything about technical analysis and still lose money. You can understand every pattern, every indicator, every strategy, and still blow up your account. Because knowing what to do and actually doing it are two completely different things. Let me give you an example. Imagine you're in a trade. You've done your analysis, you know your entry point, you know your stop loss, you know your profit target. Everything is planned. The trade goes against you, not by much, just a little. Your stop hasn't been hit yet, but you're starting to feel uncomfortable. That little voice in your head starts talking. Maybe I should close this now before it gets worse. Maybe I calculated the stop wrong. Maybe I should just take a small loss instead of waiting for it to become a big loss. What do? If you're like most traders, you exit early. You take a small loss, you tell yourself it was the smart thing to do. You were being disciplined. Then what happens? The market reverses. It goes exactly where you predicted it would go. If you had just waited, if you had just trusted your plan, you would have had a winner. Now you're frustrated, you're angry at yourself, you feel like you missed out. So the next trade comes along. You do your analysis again, you set your stop, but this time you tell yourself you're going to be strong. You're not going to exit early. The trade goes against you. It hits your mental discomfort zone. That same voice starts talking, but this time you ignore it. You hold on. You prove to yourself that you can stick to the plan. The market keeps going against you. It hits your stop. You take the full loss. And of course, as soon as you're out, the market reverses. This is the psychological trap that destroys traders. It's not about what you know, it's about how you respond emotionally to uncertainty and risk. Every trader operates from a set of beliefs. Most people don't even realize they have these beliefs. They just seem like common sense. They seem like the way things are. But these beliefs create your experience of the market. Let me share some of the most common beliefs that losing traders have. I need to know what's going to happen next to make money. Losing money means I did something wrong. The market is against me. I need to be right to be a good trader. If I analyze hard enough, I can predict what will happen. These beliefs feel true, but they're not true. They're just beliefs, and they create a psychological experience that makes consistent success impossible. Here's what professional traders believe instead. I don't need to know what's going to happen next to make money. Every trade is simply one instance in a series of trades that will produce a profitable outcome over time. The market is neutral. It's not for me or against me. My edge is in my ability to execute my plan without interference from my emotions. Anything can happen at any time. Do you see the difference? It's not about what strategy you use. It's about the internal framework you're operating from. When you believe you need to know what will happen next, every moment of uncertainty feels like danger. Your nervous system activates. You start making decisions from fear instead of from logic. When you believe that losing money means you did something wrong, every loss becomes personal. It becomes evidence that you're not good enough, that you failed. But when you understand that trading is a probability game, everything changes. You stop needing to be right on every trade. You stop taking losses personally. You start thinking like a casino instead of like a gambler. Most people think discipline means forcing yourself to do something you don't want to do. They think discipline is about willpower, about being tough, about gritting your teeth and following the rules even when it's hard. But that's not discipline. That's internal conflict. Real discipline comes from alignment. It comes from having beliefs that support the actions you need to take. When you truly believe that you don't need to know what will happen next to make money, you don't need willpower to execute your plan. You just execute it because it makes sense to you, because it's consistent with how you understand the market. When you truly believe that any individual trade is meaningless, you stop needing to force yourself to take losses. You take them naturally because they're just part of the process. Consistency in trading is not about forcing yourself to follow rules. It's about creating an internal psychological structure where following your rules is the natural thing to do. Let me tell you something that might surprise you. The best traders I've worked with don't have to try to be disciplined. They don't wake up every day and psych themselves up to follow their plan. They just follow it because their beliefs about the market are aligned with their actions. This is why mental conditioning is more important than education. You can teach someone a profitable strategy in an hour, but it might take months or years to restructure their beliefs so they can actually execute that strategy consistently.
There are two emotions that destroy more trading accounts than anything else: fear and hope. Fear keeps you out of good trades. Fear makes you exit winning trades too early. Fear makes you move your stop loss. Fear makes you not trade your plan. Hope keeps you in losing trades. Hope makes you believe that the market will turn around. Hope makes you add to losers. Hope makes you ignore your stop loss. Both of these emotions come from the same source: attachment to outcomes. When you're attached to being right on this trade, you experience fear when the market moves against you, because being wrong means something about you. It means you failed. It threatens your self-image. When you're attached to making money on this trade, you experience hope when you're in a losing position, because accepting the loss means accepting pain. Your mind would rather avoid pain and hold on to hope, even when hope is irrational.